Hi guys, welcome to my channel. I'm Eva, a mortgage professional talking all things finance. So as you can see by the title of this video, we're going to be talking about the 7 things that could potentially cause your mortgage to decline. Now, a lot of my job, or majority of my job, is to research all things mortgage. And recently, I have came across so many different things that could potentially cause an application to decline that you might not even think of. I mean, don't get me wrong, some of the things I'm going to cover off are pretty obvious. However, there are some that may shock you. So make sure you watch right till the end so that you can avoid making any of those mistakes. So without further ado, let's jump right into the video. So number 1 is incomplete address history. All lenders will want to see at least a 3-year address history. So make sure whenever you move address or anything like that, that you register to vote at that address. And also make sure that your dates actually match up. We don't want any gaps in your address history, as that is really difficult for lenders to actually verify if they do have automatic credit scoring, which unfortunately a lot of the mainstream lenders do have. So one thing you can do right now is to check your credit report and make sure your address history has no gaps in it, and if it does and that's an error, make sure you get it rectified. So you can contact either the actual credit reference agency such as Equifax and Experian, or you can actually contact the electoral registration office to tell them that there's an issue, that there's an error in their records. But either way, make sure you sort any issues like that out. Now number 2 will come as no surprise to you, but I hope anyways, and that's bad credit history. As you know, the worse your credit history, the harder it is to actually obtain a mortgage. A missed payment here and there may not have a massive impact, but if you have a CCJ, a default, bankruptcy, anything like that, it does make it a lot harder to obtain credit. Now, it doesn't make it impossible in a lot of circumstances. However, it does depend on how bad things really are. If you do struggle with bad credit history, I would recommend that you watch this video, as in that one I talk a lot more about getting a mortgage with bad credit history and what lenders actually look for. Either way, if you do have bad credit history, make sure going forward you keep your repayments up to date and avoid getting new debt. Number 3 is one that you may have never even thought about before, but that's having a financial association with somebody with bad credit. So for example, your husband, your boyfriend, your mother, father, anyone like that who you have any financial association with that's present on your credit report. So that could be any loans that you've taken out together, any joint bank accounts, anything like that. If that other person has bad credit, the lender will look at that and they might use it against you. So I know this is a very difficult one, but if your partner has bad credit history, try and avoid getting any joint credit commitments together, as I say, it could negatively impact your mortgage application in the future. Now number 4 is something that honestly breaks my heart every time I see it on a credit report, and that's payday loans. Now, some of you might think that, they're a quick and easy way of getting some extra cash to help with cash flow. Yeah, they are. However, lenders hate them, right? And I mean hate them. A lot of lenders that have automatic credit scoring, but even those that have manual underwriting, do not like seeing payday loans on your credit history. The main reason for that is because that could suggest that you are not very good at managing your money, which obviously is not something a lender wants to see. So whatever you do, avoid payday loans at all costs, as honestly it'll come to bite you in the years to come. Also, the interest on payday loans is through the absolute roof. There are literally no advantages to it. If you are struggling for short-term cash flow, you're probably better off using a credit card instead, as the interest rate tends to be a lot lower than using payday loans. But ultimately, you should be saving for an emergency fund. You should have an emergency fund sat there for those type of situations where you are really short of cash flow. Number 5 won't apply to a lot of you. However, it is still important to mention it, as I know more and more youngsters are thinking of getting onto the property ladder. Now, if you're under 18, or with some lenders if you're under 21, you won't be able to get a mortgage. You have to be at least 18 or at least 21 with certain lenders in order to be able to get a mortgage. So no matter how good your savings are, no matter how good your income is, if you're not not 18, it is very unlikely that you'll be able to get a mortgage. So you might have to wait those extra years. So use them wisely and save more. Number 6 is very important to mention, as I don't think a lot of people actually realise this. However, criminal convictions can cause your mortgage application to decline. A lot of lenders will not accept convicted unless your conviction is already spent. So if you do have any criminal convictions, make sure you always disclose this to your mortgage advisor, as that way they'll be able to tell you what your chances realistically are and whether you can even get a mortgage, as there's no point even applying if your advisor knows for certain that you cannot get one. So always disclose it. And the last one I think will shock you, because it definitely shocked me. I wasn't aware of this until recently, and I do think it's highly unfair. But ultimately, the thing that can cause your mortgage application to decline, if there are no other reasons, is the lender's algorithm. Yeah, you heard it right. Lender's algorithm. They have their own algorithms when they have the automatic credit checks, and it could be anything at all throwing it out, such as them already having too much borrowing in a particular postcode or in a particular area, or even the types of lending. They might have too much of it at that point, so they don't want any more, and if you fall into that bracket, they'll simply just decline it. Now, unfortunately, there is no way of getting around this one apart from trying. It is very rare that this happens, so please do bear that in mind, that it is very rare that this happens, but it could happen, and it's important that you're aware of the risks. But once again, speaking to an independent mortgage advisor will help you with this, as even though obviously they cannot guarantee that your mortgage will be accepted, they know the lenders better than you do. So they'll have the insider knowledge required in order to help you obtain a mortgage and hopefully get accepted. So don't ever underestimate the power of a really good mortgage advisor. And that's it. So these are just some of the things that could potentially cause your mortgage to decline. So make sure you make a mental note of them. Now, I am very keen to hear your thoughts on this, and if any of those actually shocked you, just like they have me. So make sure you pop it in the comment section down below, as I'm really keen to know what your thoughts are. But with that being said, if you like this video, please give it a big thumbs up and also subscribe to my channel down below. Thank you for watching, and I'll see you guys back on Monday with a brand new video. Bye guys.